All right, that is some important global market opinion that we are tracking. But let's now talk about all of the cues and how they are looking as we get into this fresh trading session. We have our research team here with the trade setup and all of the stocks that you should keep on your radar today. Nigel, Ekta, as well as Vahishta all join me now. Guys, a very good morning to all of you. And Ekta, let me come to you first. Take us through the market cues we should watch. The global setup, once again, not looking too great.
Morning. Well, yes, absolutely. Like you mentioned that the global indices are weak again in today's trading session. So that's probably going to weigh on sentiment. But yes, the markets did close higher after slipping in the last two sessions for the Indian markets. The Sensex rose over 450 odd points. We have the Nifty, which rose around 150 odd points as well. FII's net sold around 538 odd crores. DII's net bought around 697 odd crores. So net there was a buy figure that came in from the institutions. Now, global markets continue to mull the recession risks. That's basically the larger theme which is playing out due to the lack of cues as well. That seems to be the central theme at this point in time. So the US markets did close lower in yesterday's trading session. There was some data which did come out from the US, such as the home builder sentiment, which dropped for the 12th straight month and which was the lowest since 2012. Asia, largely lower, like you have been talking about. And this is despite hopes that there could be a revival in the Chinese growth going forward. SGX is indicating a largely flattish start with a bit of a negative bias at this point in time. Oil has risen overnight as well on the back of optimism on the Chinese economy, but the recession fears seem to be capping any kind of upside, which would definitely be a good thing for us in terms of a net for the macros. The street will continue to hope for a Santa Claus rally, so let's see whether that comes through or not. There will be an IPO opening as well, so do watch out for any kind of traction on that one. Elon Electronics, and separately data this next couple of days would be inclusive of the RBI minutes back home as well as the US Q3 GDP data.
All right, Ekta, thanks a lot for putting all of those cues on the table. But let's now also talk about the individual names that we should keep on our radar as we get into this session. Vahishta is standing by with that entire list. Vahishta, good morning.
Good morning, Pavitra. Let me start off with IRB Infra, which will be having a board meeting on the 4th of Jan to consider a stock split. Moving on to Sterling and Wilson Renewable Energy, when the promoter, Mr. Kharshad Daruwala, will be selling up to 1.58% stake via an offer for sale. Also, promoter Shapurji Palanji and company will be selling 3.69% stake in Sterling via an OFS, and the floor price for the offer will be 270 rupees per share. Moving on to NBCC India, the company has won an order worth approximately 70 crores. The company has received a contract for the construction of a new multi-storied quarter complex from the Odisha Power Transmission Corporation. IPCA Laboratories has acquired an additional 6.53% stake in Trophic Wellness, which is engaged in the manufacturing and marketing of several SKUs of the nutraceuticals under the brand name NutriCharge. And with this, IPCA Labs will now hold 58.88% shareholding in Trophic Wellness. Just Dial, the news is that Reliance Retail Ventures Limited, which is the promoter, intends to sell 2% equity shares of the company for the purpose of complying with the requirements of the minimum public shareholding. And the last stock is Dabur India, wherein the news is according to CNBC Awaaz. The promoters are likely to sell shares worth 800 crores via a block deal today, and this is likely at a 4% discount to the current market price.
All right, Vahishta, thank you for taking us through all of those stocks that we should have on our radar. Finally, let's also talk about all of the cues from the futures and options space. And Nigel is joining us with exactly that. Hi, Nigel.
Well, morning. Seems like Santa Claus wants to visit at least the Indian markets, because yesterday we were outperformers. We did pretty well in trade and we ended virtually at the high point of the day. So Monday was a good session for us. The Nifty went ahead, took support at around that 18,250 odd, which was the day's low. And we did see a defense from there on. So we did recover substantially. One school of thought was maybe we're going to go back down to around the 50 DMA. That would be another 150-point correction from yesterday's low. Well, that didn't happen, so that's good news. Nifty heavyweight stocks, whether it was ITC, HDFC, Reliance Industries, well, they more than compensated for the weakness that we saw in IT names yesterday. While the Nifty Bank, it saw a bit of a consolidation. Why did we move up then in trade? Well, there was clearly a short covering bounce that played out. The Nifty moved up, the open interest was low, so that's telling you there was a bit of a bounce, and that perfectly ties in with what the FIs did in the F&O market. So on the index futures itself, well, they covered close to around 13,000 short contracts. Now that's good news. On the option side, well, they bought more calls than puts. But for me, the positive is they're writing puts yet again. telling you that at lower levels, they believe that there is some support that's playing out there. And what were they writing in trade yesterday? The 18,300, 18,200, and 18,350 put. Just take a look at that. All of them together, close around 85 lakh shares added. So there was put writing that was evident yesterday. On the upside, though, we did see that the calls that were written, well, they got unwound yesterday. So there was some kind of fear among the bearish sentiment itself in trade. We're not out of the woods, but for a fresh breakout, we'll have to get past the 20 DMA on the upside. The 50 DMA, well, that comes at around 18,100. That's a line in the sand, actually, in terms of support levels. But I'll say yesterday's low, well, that should be your first stop loss, because we bounced off that level. So the SGX Nifty suggesting a bit of a downtake to kickstart trade. Maybe if you get a deeper gash, maybe a 50, 60 point downtake, then in fact, maybe you could look to get into the index. But otherwise, we're in this band of around 400 points, 20 and 50 DMA. Back to you.
All right, Nigel, Ekta, Varishta, thank you very much for joining us and prepping us up for this trading session. With that, we're going to get into our first break on the show. But up next, like we just told you, promoters of Sterling and Wilson look to sell stake in the company. We'll get you all of the details when we come back. Hey guys, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. And like we were just telling you, promoters of Sterling and Wilson are looking to sell up to 5.2% stake in the company via an offer for sale. The floor price for the sale has been fixed at 270 rupees per share. So Yash is here with all of the details. Yash?
It's a sizable chunk which the promoters of Sterling and Wilson Renewable would be looking to sell through offer for sale or OFS mechanism. So the total quantum which these promoters are looking to sell is up to 5.27%. There are two sets of promoters. First one is the individual promoter, that is Kharshad Daruwala, who's looking to sell up to 1.58% stake in the company through this OFS. Out of this, about the base issue is about 1.07% stake, and the oversubscription portion, that is about 0.51%. The second set of promoter is Shapoorji Pallonji Group. They are looking to sell about 3.69% stake in the company through this OFS. The base issue here is about 2.5%. Oversubscription is 1.19%. This particular OFS is expected to be executed between December 20th to 21st, and importantly, the floor price has been set at about 270 rupees per share, which is about 4.76% discount to the last closing price, which was about 283 rupees and 50 paise. Importantly, this particular OFS will help the promoters of the company to also comply with the minimum public shareholding norms.
All right, Yash, thanks a lot for bringing us all of the details on Sterling and Wilson. But with that, we have to get into a short break now. When we come back, we're going to shift focus from equities and talk about the commodity market. So stay tuned for that. Welcome back, and as promised, let's talk about the commodity space now. Manisha Gupta is joining us as always with that update. Manisha, good morning. What do you have on your radar today?
Natural gas prices, which have continued to decline in the Asian markets today as well. If you look at the U.S. natural gas prices, they're down by 15%, and the European natural gas prices are down by 20% in the same time. The 27 European Union energy ministers have agreed now to a price cap for gas at 180 euros for megawatt hours there. Now, this is going to be implemented from 15th of Feb, and the deal will be formally approved only once all the countries have given this in writing. The prices cap will now apply to private gas trades, which are outside the energy exchanges, but that is as of now. A very sharp decline is what we've seen in gas prices since this has come out. And there also are statements from the Intercontinental Exchange saying that they could move TTF trading to outside European Union if the prices are capped. So there's just so much happening when it comes to gas before this year ends. In the meanwhile, when you look at the gas prices itself, from an all-time high of 343 euros, we've declined to 108 euros right now. So more than half of a decline in prices from the kind of highs we've seen in this year.
All right, Manisha, thanks a lot for getting us that update on natural gas prices. In fact, let's also hear out what Daniel Yergin of S&P Global has to say on the issue of European gas price caps. Hear him out.
Well, I think it was inevitable that there would be a price cap because Europe simply could not withstand what happened last time as they were filling the gas storage at the same time as they were actually using gas. I think it probably will work, but I think it's also an anticipation of next winter where there is more worry because at that point, there will be no Russian gas with which to fill the storage. And so this is trying to prepare the ground. It will be interesting for its impact on LNG prices and this kind of coming competition between Europe and Asia for LNG.
All right, that is the word coming in on European natural gas pricing. But with that, let's also move on and bring you the latest on Twitter. 57% of the 17.5 million respondents have called for Elon Musk to step down as CEO of Twitter in an informal poll posted by Musk himself. Remember, this poll came on the back of Musk receiving online backlash for sudden policy changes at the social networking company. Sanjay Suri is here with more on this. Sanjay.
This could turn out to be the biggest corporate harakiri of all time if indeed Musk were to fully and finally step away from all management control of Twitter. He had invited a poll on Twitter asking if he should step down as head, and he promised to abide by the results, and the results are here, a very substantial number, and the majority by very clear margin have voted for him to step down. Musk could hardly have expected this result. This was intended more likely as a move to establish himself not just as the owner and chief executive, but the manager by global vote, the first such manager. And the plan B would be for him to then step back as manager and get someone else in to stop the advertisers leaving in the hordes in which they have been leaving Twitter under his charge. Not many, though, see Musk slipping quietly into the oblivion. For a start, he would manage any new manager. He also says that no one else wants the job. There is no successor. It's very hard to put consistency to anything Musk says. And of course, he could point to the fact that of 122 million users who could have voted, a small fraction voted, and then a smaller fraction then voted him out or wanted him out. It does not seem likely that Musk could simply look on as spectator or just continue as a Twitter user, and then let's say if a new manager were to propose rehiring the staff that Musk fired, and that's more than half of the staff, that Musk would simply say okay. Or if someone else were to put in a political agenda that he doesn't want, he would accept that. He clearly has his own political ambitions and expressions that he has been using Twitter for. But clearly, this is a big blow to this self-image of Musk as some sort of a messiah out to lead the world into a brave new future, well, on Earth and then beyond Earth into other worlds through SpaceX. The fact is that he has been a very compromised messiah. He banned the accounts of some independent journalists, then reinstated them. He brought in certification, paid certification in unclear ways, abandoned it, reinstated it. Not a very steady hand on the till at all. The best bet clearly would be for Musk to step back, if not step down.
All right, Sanjay, thanks for that. 57% of all the respondents have, voted for him to step down as CEO of Twitter. But with that, we're going to wind down on this edition of Power Breakfast. All the Asian markets, barring just the Japanese Nikkei, are in the red right now. Hang Seng leading the losses with a 0.9% cut. The SGX Nifty also around 16 points in the red right now. So maybe a slightly soft start. Thanks for tuning in. Bazaar Morning Call is up in 2.